Realty Income keeps issuing more shares, interest rates keep on rising, and something feels like it's going to break in the REIT sector, as top high-quality names like the monthly dividend-paying company Realty Income is once again wedged at a 52-week range low. But should investors like myself be concerned about owning shares of Realty Income? Should we be buying more perhaps? Well, stick around until the end of this video because we're going to tackle all the hard answers to questions when it comes to Realty Income, and if or if not the stock could be a massive buying opportunity as of right now. But before we get into all that, please drop a quick like down below and subscribe for more future content like this. So first off, looking at Realty Income as of right now, basically sitting right at the 52-week range low at around $53 and some change. Now, Realty Income has had quite a year along with the rest of the REIT sector. Looking at the Vanguard Real Estate Index performance year to date, even VNQ is down in the red 2.16%. But Realty Income, a REIT with not even necessarily a high beta, has really moved around quite a bit over the past year, trading over $73 per share just around a year ago. And with some sort of bullish news coming in saying that the Federal Reserve actually decided to hold interest rates steady as of right now, it seems like the real estate sector, the REIT sector, could possibly have some bullish energy on it for the first time in a while. Now, Realty Income is currently offering around a 5.71% dividend yield, which normally would be absolutely crazy, but considering right now in the fixed income bond and CD market, right now you can invest into a 3-month treasury bill, a 6-month treasury bill, or even a 9 or 1 year duration and earn right around 5.5% yield, basically risk-free, which honestly makes Realty Income's 5.71% dividend yield not necessarily all that tasty, considering you could be invested into risk-free investments, again, so to speak, and generate basically the same amount of yield for your investment. Not to mention, even money market accounts are offering around 5% yield right now. So the fact that Realty Income is offering a massive starting dividend yield, relatively speaking, for Realty Income, even though a 5.71% dividend yield is very, very impressive, and I've definitely been eating it up, when you compare the risk versus reward of investing into Realty Income compared to like a CD or even a US Treasury earning around the same yield, you really have to continue to discount Realty Income more and more, in my opinion. But speaking of Realty Income, they did actually have another dividend raise as of recently, up to 25.6 cents per share, the most recent monthly dividend raise from Realty Income, which is going to be paid out in October. Now, this is obviously impressive considering the situation the market is going through right now, especially the REIT sector with interest rates and everything else, but also impressive because Realty Income over the past year, year and a half has really been increasing their dividend a little bit faster, making Realty Income's 5-year dividend growth rate around 3%, which again isn't insanely fast, but considering it's been consistent and considering Realty Income pays a monthly dividend, I honestly have been very happy with it. Now, another thing that we have to talk about when it comes to Realty Income is this right here. The amount of shares that are outstanding for Realty Income over the past 24 months has been skyrocketing. Looking in 2021, Realty Income had around 415 million shares outstanding. Then in 2022, 612 million shares outstanding. And now as of the last 12 months, around 647 or even more shares outstanding, which is concerning to some Realty Income investors. Now, when it comes to REITs, obviously there's going to be times where they issue more shares in order to fund things like property acquisitions that are of course going to help Realty Income generate more cash flow and pay more dividends to investors like you and I. But that being said, at the rate that Realty Income is issuing more shares, obviously some investors are a little bit concerned about dilution and concerned that Realty Income might be getting over their head with how many new acquisitions they've been going after in the last few years. And speaking of Realty Income and purchases, Realty Income did just recently invest $950 million in the Bellagio, Las Vegas, and this is in an agreement with Blackstone real estate investing firm, where Realty Income added about $950 million to the investment, valuing the asset at around $5 billion. Now, it also says that Realty Income would invest around $300 million of common equity in the joint venture, subject to certain adjustments, to acquire a near 22% indirect interest in the property. Realty Income would also invest $650 million to buy a yield-bearing preferred equity interest in the joint venture. Now, some Realty Income investors weren't necessarily thrilled about this joint venture, and the stock price definitely reflected that. Now, something that I'm personally very bullish on when it comes to Realty Income is their overall portfolio and how diversified it is. On their website, it says Diversified delivers. We focus on acquiring and managing high-quality single-unit, freestanding commercial properties under long-term net lease agreements leased to leading global operators. By curating an extensive and highly diversified portfolio, our business generates reliable revenues and supports our increasing monthly dividends and strategic growth initiatives. Currently, our portfolio includes around 13,100 commercial properties that are leased to over 1,300 different clients who operate in more than 85 separate industries throughout all 50 states, as well as Puerto Rico. Now, this is exactly why I personally think that realty income is going to thrive over the next 10 plus years. So for me specifically, an investor that currently owns around 2,500 or maybe even more than that as of right now, because I've been buying more as of recently, around 2,600 shares of realty income. Across my multiple portfolios, I have a few thoughts on realty income and where I think the stock price and the entire business is going to go from here. Now, first off, I think it's important to say that in the longer term time frame, I'm talking about 5, 6, 7, 10 years from now, I think realty income will be back up, heading towards all-time highs as far as share price, probably sitting somewhere at around $85 to $90 per share. That'd be my price target for realty income over the next, I would say, 5, 6, 7, 8 years. But for the next 12 months, for the next 2 years, for the next 3 years, as interest rates continue to bubble, and as the Fed has a very, very hard decision on whether or not they're going to start actually cutting interest rates, maybe sometime in 2024, or maybe sometime even sooner, depending on if something is going to break through the markets. Now, if there is a black swan event of some sort, where the Federal Reserve, of course, needs to drastically cut interest rates substantially from where they are sitting right now, I think that obviously all the REITs across the board, including realty income, are going to see a lot of benefit from that. Because let's be real here, REITs make more money when they can borrow more money for cheaper. And as of right now, debt is very, very expensive, which is one of the main reasons on why stocks like realty income are beat up so much in share price. It's honestly kind of fair. You see, when it comes to investing into real estate or even REITs for that matter, when the price of borrowing money goes up substantially, and on top of that, when there's different fixed income investments out there that are offering the same amount of cap rate basically, that professional real estate investors are receiving, say a 4 to 5, 6% cap rate. Right now, the fact that the US Treasuries are right around that range, it's becoming harder and harder to argue that realty income, or any real estate for that matter, is going to be a better investment than just investing into some fixed income and not having to worry about it. But that being said, for the investors out there that are willing to weather the storm, at least in the short term, I personally do think that realty income will be back up towards all-time highs within 5+ years. For investors that are not willing to wait that long though, I do think that realty income is going to see some lower lows from here. I think we are going to see realty income have a 4 in front of the share price, unfortunately. And again, this is from someone that owns currently over 2,500 shares of realty income. My cost basis is probably around $58 per share. Now keep in mind, I do sell covered calls on my shares of realty income, so I'm not necessarily down as much as I would have if I wouldn't have done that. But that being said, I do think that realty income is going to drop in share price in the near term, but longer term out into the future, I think investors that are willing to buy realty income or even some of these other REITs, I think they could be very, very excited come 4, 5, 6, 7, 8 years from now, when the stock price could be almost doubled, the yield on cost is going to be massively high, and realty income will be flourishing sometime in the future when debt is actually much, much cheaper to acquire. But when it comes to realty income, the lows that realty income could possibly see within the next year, and if or if not realty income is a buy in your opinion. I want to hear what all of you think down below. If you enjoyed this video and you want to see more videos like this in the future, make sure to please drop a like down below and subscribe. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.